Hi everybody, Dana Sparks, broker of Maximum One Greater Atlanta Realtors, and today's contract tip is a follow-up regarding the 2019 GAR contract form changes to the financing exhibits. I have taught this class 5 times now, and so just wanted to share with you guys watching what some of the discussion has been regarding GAR's changes specifically to the conventional loan financing exhibit and to the all cash exhibit. So as we discussed in the last video, or I will link it below, the 2019 changes to the GAR financing contingency exhibits, there has been a change in the conventional loan where the lenders are addressing repairs for a buyer getting a getting a conventional loan. And the paragraph, it is a new paragraph, and it is paragraph 12, and it states lender required repairs. Again, this is on the conventional loan contingency exhibit, which we typically do not see lender required repairs, but all of a sudden we are seeing them, so much so that GAR has included this new paragraph on the forms, and it's form F404 conventional loan contingency. And what it states, as already previously mentioned in the video, is any repairs required by the lender are to be completed and paid for by, and you fill in buyer or seller, prior to closing, provided such repairs do not exceed X amount of dollars in total costs. In the event the anticipated costs exceed the amount listed above, an itemized estimate shall be provided to all parties from third-party contractors selected by the seller of the total cost to repair of the repairs to be made to the property. Seller or buyer shall have the option to pay the excess amount. If the parties do not agree in writing who shall pay the excess amount, then this agreement will terminate within 3 days of written notice of the estimates. So the question, the discussion that has come up in the classes is, my goodness, why is it that we are addressing repairs on a conventional loan? What is it that has prompted the lenders, many of the lenders, to request repairs? And we don't have the exact answer, but part of the discussion has led to the fact that for whatever reason, well, I know the reason, but agents are doing an amendment. During the due diligence period, a buyer is having inspections made to the property, and they are proposing a list of repairs to the seller, and the seller doesn't necessarily want to do the repairs on the property. So the buyer and the seller are agreeing to address the repair issue financially by doing an amendment, changing the sale price or changing the closing costs. Now, of course, that amendment must go to the lender because it is changing the buyer's loan, again, regarding sale price or closing costs. The issue is a lot of agents are writing that amendment that says, in lieu of repairs, all parties agree to a new sale price of X amount of dollars. And I have done a previous video on this, that it does prompt a lender to say, repairs, what repairs to the property that I'm taking on as collateral, we need to do further investigation. So the discussion has been that that might be a contributing factor as to why lenders on conventional loans are requesting repairs, and why GAR has added this paragraph into the conventional loan financing contingency. You guys, if buyers and sellers are negotiating for a new sale price and the buyer's getting a conventional loan, you need to do that amendment, but you don't need to put in the reason. Just put buyer and seller agree to a new sale price of X amount of dollars, because that's exactly what happens. When you put in lieu of repairs, the lender wants to know what you're talking about. So that might be one of the contributing factors. Another contributing factor could very well be that there are many buyers who they're past their due diligence time frame. They can't terminate based on the financing contingency because they can get financed. Their credit worthiness is worth the risk of a lender to lend them the money. So there could be a buyer, and nothing's coming across in a conventional appraisal. So there could be a buyer that is, or many buyers that are sending an inspection report directly to a lender. And the same thing, the lender says, wow, this property is my collateral. I see all of these issues coming across on this inspection report. I am going to deny the loan, and the reason will be that the property, I don't deem the property as being sufficient collateral for the amount of money I'm lending. And I can't think of the verbiage right now, but we have seen several loan denial letters where that was the reason, was that the property was not sufficient collateral for the amount of the loan. Now, that would, that is not one of the specified reasons why a loan denial letter would not be approved. So if that is the case, then for however the lender is finding out, it could be an appraisal issue, it could be whatever. But if for whatever reason, either the buyer's sending the lender the inspection report, but the lender is deeming the property that it has repair issues, and the lender does not want to loan the money on that because of the status of the collateral, then what GAR is doing in the 2019 conventional loan exhibit is, instead of that killing the deal with a loan denial letter regarding the property, that they're not going to loan the money based on that, GAR is providing an avenue to save the deal, that before that ever comes up, the buyer and the seller negotiate for a dollar amount of those repairs to be addressed. And then if that dollar amount, if the actual repair cost comes in more than that negotiated amount, then it has that verbiage regarding one of the parties can pay the excess or it terminates. So just wanted to share with you guys some of the discussion regarding why that paragraph was added to the conventional financing contingency exhibit. The other discussion has to do with the all cash exhibit and a couple of the changes. That one is a little confusing, and it shouldn't be. So just to clarify that a little further, on the all cash exhibit, it basically states that the buyer asserts that I have sufficient cash to pay for the house if I want to pay for the house with cash. I can get my hands on the cash and pay for all cash. But there might be a better use of my money. I might be better off keeping my cash wherever it is right now. If it's invested in the stock market, if it's invested in a money market account, bonds, 401k, wherever. And instead of taking my cash out of where it is now, I am going to get a loan. I'm going to borrow somebody else's money. And I know that I'm not making my transaction contingent upon borrowing the money, but that is how I'm choosing to pay for it. Well, we know with the purchase and sale agreement that there is the right to unilaterally extend the closing date if for very specific reasons, and one of the reasons has to do with the lender delay, as long as that delay is not caused by the buyer. For example, if the loan can't get out of underwriting, or if the lender has not sent what we refer to as the TRID disclosures in enough time prior to closing. So in the 2018 version of the cash exhibit, it still said that the buyer agrees they do have all cash, but the seller had the option of negotiating with the buyer that, look, I get it that you want to get a loan. I give you the right to go ahead and borrow the money to get a loan to purchase the house, but you're just not making it contingent upon that. Or, no, if you have all cash, then you're going to pay all cash. I don't care if you're making it contingent on that or not. You don't have the right to get a loan. Then in 2018, there was another option that basically stated, okay, buyer, if you are getting a loan, just not making the deal contingent upon that, because we know how lenders are, you and that other paragraph in the purchase and sale agreement, the buyer and seller negotiated, okay, you're getting a loan, not making it contingent. There was another option to negotiate. You may or may not use the unilateral right to extend the contract based on a lender delay. That's how it read in 2018. In 2019, it got changed just a little bit. In 2019, again, it asserts that the buyer does have all cash, but you can negotiate that the seller allows the buyer to go ahead and get a loan, get a mortgage in order to purchase the property from an institutional lender, just not making the deal contingent upon that. Or this is part of the new part that they added in 2019, that the buyer may get a loan or a mortgage from a non-institutional lender, for example, a hard money loan. So those are the options. You can't get a loan, you have to pay all cash, or, okay, I'm sorry. You are getting a loan from an institutional mortgage, or you're getting a loan from a non-institutional mortgage. Or the third option is, no, buyer, you do not have the right, hang on. Buyer, you do not have the right to get a loan. And then GAR attached the verbiage that buyer has no right to unilaterally extend closing for 8 days for reasons of the mortgage lender delay. I don't exactly know why they put that there, because that's under the option where the buyer is not getting a loan. So if they're not getting a loan, there's not going to be a mortgage lender delay. So I guess that's just for additional information for the buyer, but it's sort of superfluous to that option, because again, if the buyer is not getting a mortgage loan, which this verbiage is attached to, let me just read what it says. Or, buyer shall not have the right to obtain a mortgage financing to pay for all or a portion of the purchase price of the property. The buyer is not obtaining a loan, therefore, buyer has no right to unilaterally extend the closing for 8 days for the reasons of the mortgage lender delay. So if there's not a mortgage lender involved, there's not going to be a mortgage lender delay. So again, it's just sort of superfluous information, but I guess since it would be an exhibit, it would supersede what is pre-printed in the purchase and sale agreement under the extension of closing paragraph. But just a little bit of clarification on those two financing forms. Hope this contract tip helped you out. Thank you guys so much for watching. Stay tuned for more changes to the 2019 GAR, Georgia Association of Realtors contracts. Dana Sparks, broker of Maximum One Greater Atlanta Realtors, satisfying your needs with service, innovation, and education.